Welcome investors to Joe's Investment Express. Let's talk about market orders versus limit orders. What the heck is a limit order and when do you use them? I don't know about you, but my first 5 years of trading or so, I didn't really understand what a limit order was. And I never used them, but it turns out there are some real specific times when you do want to use a limit order. So let's get this figured out. And my background for some of this video is going to be SAFM, Sanderson Farms, one of the best looking charts in the market. And granted, there aren't many of them right now, but don't go running out and buying this. This is way overextended and due for a pullback. See how far below the 50-day exponential moving average is. Let's wait for another base to set up. Now, a market order, let's get to the topic at hand. Let me show you this. So, when you have a stock, you have the bid price and the ask price. A market order guarantees execution, guarantees you will buy or sell the stock. And if you buy at market, you're going to buy it at whatever the ask price is, 4.74 in this case. Notice that that's above the actual price that the stock is trading at. So you're going to be at a loss the second you buy the stock. And then if you sell at market, you're going to sell at the bid price. And notice the bid price is lower than the actual price. So you are going to lose a little money off the top there. So when do you want to use a buy market order? Well, if you're trading a stock that is very liquid, like Apple or Microsoft, or if you're trading one of the indexes, QQQ for example, the difference between the bid and the ask, it's only going to be a penny or two. They're going to be very tight. And so doing a buy at the market guarantees instant execution, and you're really not going to lose much in the way of slippage. So yeah, I use market orders most of the time when I'm trading big caps and indexes and like that. And you also use a sell at the market when you're trying to get out of a stock, either as a sell stop or when you're ready to sell. Because when you're ready to sell, you need to get out. And you don't want to limit your ability to get out of the stock. Let's say you tell the computer to sell if it breaks beneath 100, but limit it to not sell if it goes beneath 99. Well, then you're not protecting yourself, because what if you've gotten yourself into a Peloton or something that's going to go down to 10? You've just limited your ability to get out of the stock. So when you want it, when you decide it's time to sell, then get the heck out and just sell at market or do a sell stop at market. So a limit order limits the price that the computer will sell at. So you want to use a buy limit in any sort of small to mid cap stock that has a big gap between the bid and the ask. And you got to check every time, because you'd be surprised. Some of these little rascals actually are pretty tight in terms of the bid and the ask, and some of the big stocks are not. And it varies. This gap in price moves around over the course of the day. So if you've decided you really want to get into this thing, and so instead of paying $4.74 in this case, you might put in a limit for 4.66 or 4.65, and then it will get you in closer to the actual price. Of course, you know, there's no free lunch. By limiting your order, you might not get in, or you might get a partial fill. But that's what I do most of the time, anytime there's a sizable gap between the bid and the ask. And you can always walk your limit up. You know, try 4.65 if you can't get in for 5 minutes. Move it up to 4.66, etc. It's actually a good sign when you can't get in, when the ask keeps going up, because that means that the stock is getting accumulated. So yeah, in general, you're going to use buy limits for the small and mid caps. I suppose if it was a really early stage, super hot bull market, you've been watching a stock closely and it's finally breaking out, and it's breaking out big time, you could make a case for going in on the market so that you get a full position and don't miss the move. But then you're risking price. Like I said, there's no free lunch. So that explains buy limits. So when do you use a sell limit? So let me explain this. Let's look at a chart. Okay, so here is 𝙎𝙧 way back in March of 2021. Let's say you are an aggressive trader and you bought off of this little cheat area right here at about 200, and you know that when it comes into this supply, it's going to make a handle and it might roll over and it might come back down hard. So what you could do is you could set a sell limit, so you know it's going to get resistance here at about 225. So you could set a sell limit to have the computer automatically sell your shares at 225. And you don't have to sell all of them. Let's say you have 100 shares. Maybe you tell the computer to sell 50 shares and you want to try a bigger move with the other 50. So that would have worked pretty well, right? It would have sold 50 here and you would have locked in some of your gains, and then it kept going. So now let's say you're enjoying this next big move in 𝙎𝙧 and you think the stock's getting stretched, the rally's getting kind of late stage, and you just have a feeling that the fund managers are going to sell off this stock at around 300, which of course they did. If you look, that was the top. So what you could do then, you've already sold 50 shares, you got 50 shares left, so then you could again set a sell limit for the computer to sell the rest of your shares. Now, you want to get ahead of this, so if you think they're going to sell at 300, maybe you sell at 297. Maybe you want to sell at 295. And again, maybe you only want to sell half of your shares. Maybe you sell 25 of them. Now, if you set a sell limit, you can't set a sell stop at the same time. So then, what do you do to protect yourself? Well, what you do is you set an alert, and you tell your brokerage, or I use stockcharts.com, to send you a text and or an email when the stock falls below a certain price. So I have my sell limit set at 300, but let's say I want to sell also if it pulls back 20% or something. So I could get out my calculator, or I could look, at a support zone on the chart and have it send me an alert when it gets beneath that price. And then I could just change my sell limit to a market sell and get the heck out of there. So this 𝙎𝙧 runs up to 300. You sell limit out for half of it at 297, and then you decide you're going to hold the rest until it breaks the 50-day exponential moving average, and it drops pretty hard, but you still locked in a really good gain, and you got out near the top of the market. So that's how I use buy limits and sell limits, and how and when I use market orders. That's really all there is to it. I could show you more examples, but I think you get the point. Let me know if you have any questions. I believe I did a little video on sell stops, so check the my investing tutorials list, and it should be in there. Other than that, that's pretty much it. So have a great I was going to say have a great summer, but I'll talk to you again before the summer's over. Let me know if you have any comments or questions, and good luck out there. I know the market is tough, but it's we're going to get through it together. Let's say that. Take care, everybody.